We can go ahead. I will just make a few comments. We had a shareholder survey quite recently. If I remember correctly, it was before the war, which we had the survey, to put it in some context. But yeah, just a quick update on our book value per share, which was sent out yesterday. If you have an account at Captena, you should have seen the update. It's up a few percent since we did the capital raise, and it's worth pointing out that this is despite the fact that a war started after we did the capital raise. So I think it's worth keeping in mind that, you know, whatever happens in the world doesn't automatically mean that you should sell everything and run and hide and don't come back. But you know, you should actually focus on the things that matter. And I think Tommy also mentioned this is how they focus on things at Fort Knox. They don't try to factor too much about, you know, political events or world events or what have you, but rather just focus on those things you can actually control. One comment also about the annual report audit. There just some housekeeping there. There was in the audit report, there was a statement which said we have audited the 2021 accounts, and then 2 sentences later there was since we have not audited the 2021 accounts, we cannot comment on them. That was a mistake. They sent a correction, and it was wrong for the first hour or so after the send out. So apologies for that on behalf of our auditor. One last housekeeping on the Captena part. There were a few questions on Captena, which is if you're a private shareholder in Sweden and own River Oak shares, you have your account through a company called Captena. This is not a partner of River Oaks. It's just a provider of a service, and any questions you have on Captena or their partners, Nord Fondkommission, there is Futurpension, the pension companies, we have to refer to them. They are very good to deal with, I think. Recommend just contacting Alin or Captena. They are quick to get back and easy to deal with there. There was also some comment about being some disappointment with the 2021 results and whether how that relates to the new board. And I would just say that, you know, it's not related to the new board, because our result in 2021 is baked in 2018, 2019 to 2020. That's really when you know, you do the work from which you see the results in 2021 and so forth. But I think it's good that a question like that comes, because if you don't ask, you'll wonder. And so please keep questions like that coming. And on that note, I actually view 2021 as one of the better baking years, so to speak. Sometimes you need to bake a little bit more, and sometimes you saw the rewards of previous bakings, so to speak. Maybe I'll just, Tillman, if you can put up our returns table. Yeah, so, you know, it would be really nice if we could have a smoother table here. It's quite wild dispersion in the range of the annual results. If you look in the bottom row, you know, it would be nice to have 25% year after year after year after year. To my knowledge, there was only one famous person that managed that, Bernie Madoff, and you know, I think he reported 10% returns every year. And you should be quite suspicious if you see something like that, even if it's 5% or 10% or 15%, that should raise your suspicions. In real life, especially in the investment world, you know, it tends to look like this. Maybe not as wide, but along these lines. Of course, the companies we invest in don't look like this at all. There it is much more steadier gains. But in the investment world, and especially in the public investment world, this is the reality you have to live with. If I could choose, it would simplify things a bit if it would be 25 every year. But yeah, I try to focus on the last row, and that's what you should focus on as well. And at least, as I mentioned, I talked a lot about in my letter that, you know, at least the 3-year period is what I think is appropriate in our world. And I should also mention something called there's something called the CEO instruction in Sweden. I didn't know this when we started River Oak, but when it was one of the first things we did on the board when we started, a CEO instruction, which basically says where the CEO has autonomy and where the CEO has to check with the board. When it comes to public investments, we have always had since day one 100% autonomy for me, the CEO, to make decisions there. On the private side, we have an amount set over which I need to check in with the board. So just want to clarify that this has been the same with the previous board. It's been the same since our start, and it's the same right now and will likely continue to be. There was also a comment that came up on our on our book value per share. We report it 4 times per year, but only 2 times in letters. So unless you have a Captena account, you're only going to see our book value per share 2 times per year, and in connection with our capital raises. When it comes to showing it more often, there was a specific comment that wanted us to show this book value per share even daily, and said that it wouldn't be difficult to show, and it wouldn't. It's very easy it would be very easy to show the book value per share much more often. Of course, there's a very good reason why we do it. This is quite similar to how if you ask 90%, if you ask people about, you know, are you an above average driver, 90% will say that yes, I'm above average, right? And similarly here, people think that I will be able to see the book value per share, all the swings, and not do anything. It's not going to affect me. It might affect them, but you know, not me. But there is a quite famous story about this. I usually quote a legendary investor, Peter Lynch. He has one of the best public fund records, I think, that I know of. Between 1980 and 1990, he compounded the fund at 23% per year, compared to you know, the indices, which were maybe around 15 or 16%. But he calculated that investors in his fund actually got an average of 7%. So, you know, what happened? Well, they added a lot when everything was going great, and they took out money when everything was going less well. So they actually ended up with not only a lot worse than the result he got for them, but a lot worse than the indices as well. And one thing I really like with River Oak is we have set up a structure where every shareholder gets exactly, so far at least, because no one has sold out of River Oak yet, they get exactly the result we actually produce, which I think is a wonderful outcome. And especially, I can guarantee you that no large Swedish funds, public funds, can say this. I can guarantee you that their investors are a lot worse off than the actual result of the fund if you just stayed all along. And then maybe Tilman, if we can get up the how likely are you to recommend? Yeah, this was an average of above 9. Happy outcome. The most prominent reason was trust in River Oak, the long-term thinking that we have results, and that you're actually able to reach and talk to me. One person put in a recommendation of 1, and on the scale of 1 to 10 he put in a 1, and I was a little surprised, and then at the end he had actually explained, and he said, I never recommend investments to friends, so I put in a 1. Kind regards, Lasse. So I don't know if you're here, Lasse. I can't see. I only see a few of you, but so we took that away. Maybe if we can go to the next slide. So there was also a question on what net return do you expect when you joined, and what return do you expect now? Naturally, given our results and what we communicated at the start, it would have been reasonable to assume that this would have gone up. Actually, only 3 investors had their expectations increased, and I don't mind at all if you have the expectations increased. It's just I always try to remind everyone to keep keep in mind what we set out to do, and we have a goal of 15% investment returns per year. Sometimes they will be lower, sometimes they will be higher, and even materially higher. Sometimes they could be materially lower. It's important to not get carried away in either direction, really, because yeah, that's really what a lot of people out there do. And if we do the same thing, we're going to get the same results as the averages. So we really want to avoid that, and pretty happy that it looks like this. Only 3 investors out of 30 who answered, which was at the time of the survey, I think, about half of shareholders. So yeah, next slide. Yeah, there was also a question on the long-term goals. You know about the financial goals. I just mentioned them, but yeah, it's really, we want to avoid losing money at all costs. And besides that, we want to reach an investment return of 15% per year on average, which implies with our current structure a little bit lower increase in book value per share, but still well above the average of the indices. We also want to be known for the honesty and integrity of the operation. Everyone should feel that this is a very honest and simple and easily understandable operation. And I'm happy because I think we're delivering on this so far, because my feeling is that whenever one of you has a concern, you usually just reach out, whether it's a WhatsApp message or an email or a call, and yeah, that's hope to build. And there's also, make a meaningful difference in our lives is what's driven me largely since I started thinking about entrepreneurship at all. And of course, this takes some time, and but it's a worthy goal, I think. And finally, be a positive influence for all companies we invest in. So this could be me reaching out with something to Tommy, to some of the other CEOs. Some CEOs we cannot reach because they might be a very large company and difficult to reach. We're still quite small in the big scheme of things. So this will also take time, but that's an aspiration I have. And yeah, in the end, how do we get there? I think CEOs are interested in talking to me or to our board members if we know a lot about their business. They're not so interested in talking if I come and ask them, and what do you think your stock price will be in a half a year or 12 months? They probably won't even bother with that. So it's a big focus on business always, a long-term mindset, and yeah, keeping things simple always helps everything, is my view. Yeah, I think that was largely it, and I'll leave it to Tillman for some questions.
Great, thank you very much. As we have some who have sent in questions already here, I maybe want to invite them to ask them directly. And if you have further questions, please just raise your hand that I know that you have an interest in asking a question. There's a button below. But maybe we start with Thomas, if you're okay with this, because you've handed in 2 great questions.
Hi, Daniel. Can you briefly describe the current 3 biggest positions? Who are they? What are they doing? And of course, why do you like them? I mean, from a long-term investment view.
Yeah, sure. I think I have a policy which is, you know, when it comes to portfolio weights, I don't think it's sensible to give away everything. When I ask Tommy about a few things, he will tell you a lot of things, but he's not going to tell you everything, and that goes for any company, right? I think if you know, the world's most followed companies, Apple and Google, they're very secretive about what they're actually putting out. So I don't want to get into specific weights, but I think I'll mention 3 companies which we are invested in. First, I think Fortnox needs not a lot of introduction, but basically, you know, it's the ultimate software platform for small businesses in Sweden. Really, it really does. It simplifies the life of all small business owners in Sweden, whether that's, you know, your accounting, which you're legally required to do, whether that's invoicing, salary payments, scanning receipts, and I've written quite extensively about Fortnox, but I think maybe one thing I mentioned why I like them is, you know, you saw Tommy here, and he says he's running a company which is almost doing 1 billion in revenues now. Will do probably in 2022, surpass that by a margin, and he, you know, is very easygoing, easy to deal with. He's gonna go and help with some cleaning on the tennis court in his city, and the whole culture is like this. Every single employee that I've ever interacted with from Fortnox, whether that's at one of their you know, meetings, they have one in Uppsala. They go around with a bus in all of Sweden, 2 buses actually, and they have full days where they tell about their products. Entrepreneurs come there, small business owner come there to listen, and you get this feeling when you talk to any of them, they're all, you know, super happy. They are very, I'd say, ordinary people doing quite extraordinary things. That's been my view of them since I first came in contact with them in 2015. And yeah. The other one, to those of you who were here last year, one I would mention is QT Group. I label it Photoshop for developing smart screens. So instead of editing pictures, you're editing your software program to be able to have a great smart screen, whether that's a coffee machine or a washing machine, or, you know, a dashboard on your car, medical devices, basically any digital smart screen that you can think of. they enable. They give you the studio to build that. And reasons why I like those are that I guess is quite obvious. If you think about how the world is looking today, every company is going towards that, and a lot of the value in a product or service is actually in the software part of it, not in the hardware part of it, which might have been the case a few decades ago. Let's see, a third one. There's a company called Live Chat Software. So they have a small, when you go to a site today, many of them have started to have this small live chat pop-ups at the bottom of the screen. So if you want to ask a question about a product, if you want to, get help with this, with an order of yours, it's a very convenient way, instead of having to send an email, getting the email back, waiting for the reply, maybe not getting a reply. You can actually just catch a person right away. So so that's the reason why I like it, and it's also at quite a lot cheaper price than a few of our other holdings. That was one reason why we invested there. And some could say that that's sort of a commodity. There are loads of solutions like this. This is actually one of the solutions, which I think is one of the ones that are best in class, and their profitability really shows it, with very high margins, and you're likely not going to have that over a period of many years if you have a commodity product. Things are changing fast, as we all know, in this part of the world. So something that's continuously watched. But those are three I'd mention.
Great, thank you. Thomas has another question, but I would put him in the row because there are two others raising hands. Cyril, it's your turn.
Thank you very much, Daniel, for the presentation and for having me. I would be interested in how you spend your day. Could you give us an indication of what percentage of your time goes into what kind of task?
Good question. I think in the early years, it was more reading actual investment letters. It was listening to calls and talks and of investors, right? I think over the past, I don't know how many years, but 5 or 6 or 7 years, it's almost gone completely towards getting first-hand material from the companies. So whether that's talking to a CEO, a CFO, or people at the company, really, through different calls, but also just reading reports, I'd say it's probably surely more than 80%, I'd say, goes into that type of work. That's both the companies we are already invested in, and that's also companies that I'm studying quite closely, which I believe we will be invested in. And I actually also do count workout as part of work time, which I think is important. So definitely spend 6 hours out of 50, so around 10 to 15% of that to keep the mind sharp. Really, that's mostly why I do it, and then to feel good.
Maybe then Per.
Yes. Hello. Nice to be here. I'm also a bit curious about the portfolio, but of course you tell us what you want or not. But I wonder about how if you could say, for example, how many positions you have. So that's one question, and the other, I'm a bit curious about how do you think about buying and selling companies? I mean, I see in the year letter that 16% is cash, for example. So why is that 16% cash? Is that something that you usually have, or is it just because you have not invested the money from the round and that you've been selling? You mentioned that you have been selling some. So yeah, if you can say something about more about the portfolio, would be interesting.
Yeah. So the first was on the positions.
Yeah, how many?
Yeah, I'd say we're always gonna have between 5 and 10. We're very unlikely to go under 5. We're very unlikely to go over 10. I think it's never happened. In fact, I think we've always been between 6 and 9, maybe at one occasion, but I think 6 and 8 has been the same for these 5 years. Always, they have changed, right? There's been Fortnox is the only day one investment that we still hold. There was also another day one investment which we had hold for quite some years. Fiat Chrysler and Ferrari was in that as well. Yeah, that's where it's been. I think I see it staying there. There are quite many reasons for it. One is, the resources we have. We don't have 10 people or 20 people. And I also think it's one way to really be different here. If you actually want to, if you want to compound if you want to have the type of returns that we have had, about 30% investment returns, or if you even want to have about 20% investment returns, I think you really need to focus in on your best ideas. And there's been a lot about this, but I'll just, if I can recall it, I'll mention a study that I recently came across that was sent. And there was a researcher that had figured out, a professor that had seen that around 96% or so of the returns were actually caused by something like 1,000 companies. I think this study was done in the US, but I really don't quote me on the numbers, but it was a really big percentage of returns over time that were created by a very small amount of companies. And of course, those are the ones you want to try to invest in. It's not easy, and you're going to get a few things wrong. But my view is you get 1 or 2 or 3 or 4 right, you're going to do very, very well. It's quite unintuitive because it feels better if you have 30, right? And let's say you have 30 positions and all of them gain 30% over 3 years. That's still going to be a quite average annual return of 8% or so. And then you compare that to a portfolio with 5 positions, let's say, where 2 of them go up 20 times, let's say. That's probably going to be a much, much better end result. I haven't done the math, but you see the idea there, and I could go on a lot about it, but that's really how I think what gives us the best chance to outperform, which is really what we're here to do. I think if an investment operation doesn't outperform, a benchmark passive index over time, should go do something else. That's my firm view, and that's always going to be my view. And if that changes, if I believe that that's not possible for some reason, you'll be the first to know. The other one was on cash. Yeah, I think it is an unusual situation having 16 or 17% in cash, and it's caused to some extent because of the war. Complicates things. Inflation and interest rates also complicates things for some companies. But as you know, I live with the fact that I can't predict those things. I have no insights on the outcome of the war. I have very little insights on interest rates and inflation rate, and how much interest rates will go up, if they go up, how much inflation will go up, and how long will it last for. I've always said that recessions are scary things. The word is maybe more scary than the actual event, because the definition of a recession, I think, is a decline in GDP 2 quarters in a row. If you have a time horizon of 2 to 4 years, you should be able to live with 2 bad quarters, right? It's not gonna change much for a company like Fort Knox or QT. I don't think most companies would stop their development cycles or their accounting or invoicing, right? Even in a recession, and you're gonna have these ebbs and flows. So I live with that, and the way it comes in is when it actually affects some of the companies I'm looking at. In this case, I have been looking at a few of them, and you also have COVID to consider. Usually I wouldn't care too much about any of these macro events, to be honest with you. I think these recent ones have been different in the sense that they very much affect even the companies that we look at. So I'd say the combination of COVID, inflation, interest rates cost you to rethink a little bit measuring sticks, if you will, which has caused me to hold off a little bit at the time I wrote the letter. And also, we recently raised capital just before the war started. So rather than being quite trigger happy on that, I think I held off a little bit, maybe also because of a previous mistaken investment I wrote about in the letter, Good Food. So maybe that contributes to some extent, but I'm quite optimistic that within the next month or so, we're making at least 1 or 2 or even 3 investments. It might not be in the next month, but certainly in the next few months would be my expectation. And I would just point out one thing there. It's quite important to not force anything. The best investments we have had have been 100% unforced, right? They haven't been because markets are down a lot, or you feel that you should really buy now because everyone is telling their stories about how they made the investment at the bottom of this crisis or that crisis. And it should really be when it just hits you in the head, right over the head, and you feel that, okay, this one should be an investment, whether you have a war, inflation, or all that sort of things. It should come from that direction rather than from the direction of, you can't have cash, you can't, and you should really be active when markets are tumbling. So.
Thank you. Thomas has now a question on your A-team, the board.
No, just by curiosity. With the recently, more or less recently, new board, I was wondering if the investment / selection process of yours has somewhat changed or not. Has there been more interaction with your board or not? Open question.
Yeah, I think I addressed that a little bit in the comments. And the answer is no, it hasn't changed much. And one of the reasons is, time is limited. If you're going to have to coordinate with another person or 2 other people, it'll take a lot of time and effort, and it might actually affect the work which creates our results at the end of the day. And as I said, this was very similar with the previous board. I think with the current board, they see a lot of investment data every day. They talk to a lot of companies. They talk to a lot of people at the companies, and they see trends and big trends in the industry, and will provide more insight because they're just in this industry to every day and every hour and every day. So, but in terms of the selection process, I think it hasn't changed in the sense that if Amir had an idea or Arimati had an idea 3 years ago, I'd still hear about it, and vice versa. So yeah, and this is true for probably a dozen of people which do a similar thing, invest in the public markets. So I think I hear, if you're in my situation, you're going to hear about a lot of companies, public as well as private, and there is no way of avoiding of hearing about everything. Some ideas will be good, some will be bad, and it's my job to filter through it all. So yeah, it should never, it will never happen basically that we get an idea from somewhere and just go ahead with it. I say that when you hear about an idea, that's 1% of the work. Then 99% of the work is building up an understanding of it yourself, getting to know the company, and so on. That's how we've always worked. That's how I will continue to work, with the board providing a lot of good insights and data, usually after the investment has been made. But this on some occasions can be, a few weeks or a few months after the investment was made. We come to talk about it, and I'll mention it. Yeah, by the way, we made an investment in company A 2 months ago. So that's usually how it works.
Maybe Ari and Amir want to comment on this as well. Or maybe I have the question how Daniel has changed you, if you want to comment. And then we take Hayato.
Yeah, go ahead.
Should I go first?
Yeah, you can go first.
Sure. Well, to be honest, it's always great to have, intellectual discussions about investment with Daniel and now with Ari. And, it was great doing it before we were part of the board of River Oak. And it is probably more meaningful after, because you would think some of our discussions and some of the stuff we talk about find its way maybe to the benefit of the shareholders and the benefit of Daniel's decision-making process. But at the end of the day, like Daniel said, as someone who manages money for other people myself, I don't think that like the right formula is to convene and make investment decisions in a committee once a month or once every couple of months. I don't think that's the optimal way to do this, to run a public investment portfolio. So I'm very much, in full agreement with what Daniel just described. And, having the opportunity to have these discussions maybe more frequently and maybe with a more purpose behind it is just, a benefit for us and hopefully for shareholders of River Oak as well, for the rest of the shareholders.
Yeah, I guess. I can say, Amir, you didn't have anything else to add, no?
Yeah, no, that's. I think that's it. Unless there is a specific question.
Yeah. I mean, it's a great question, of course, and I mean, we had a small group chat before the official part started. So me, Tilman, and Cyril, and I think in that chat that we had, I said many great things about Daniel. That Daniel, maybe you didn't hear, unless Tilman recorded it and will send you after. But I mean, me and Daniel, we met less than 3 years ago, and we have had so many great chats already back then, and we are still continuing to have those chats on a weekly basis. And in terms of like how Daniel has impacted me, I mean, I have become definitely better investor than I was back then. I mean, just the companies that I'm looking, how I'm thinking about the world, how I'm thinking about investing, how I'm thinking about my own investment philosophy. So I mean, it's of course it's hard to say. I'm not going to talk about 1 hour of what kind of things have happened, but it has definitely had an impact on me on all these kind of characteristics that on the businesses that I'm looking. And in general, I mean, Daniel, you were here in January for 4 days, spending time with me. We were talking about stocks and companies, about life 24/7. My wife, maybe it was a little bit too much for her. It felt like that. I had to take a look at the kids also once in a while. But it's something that, I mean, in this industry, it's a win-win for all of us to build a bigger network, to get to know the great people and to talk about the ideas. Because I mean, I'm running my business. Okay, I have a partner who is running together with me the fund. Amir, you have some team, but most of the decisions, most of the daily work is just done by yourself. I mean, I'm sitting, for example, I'm sitting at home. I don't have any office. I'm looking at the businesses, and it's great to have people like Daniel or people like Amir who can help you to, if you have some interesting insights to share with someone, it's definitely a win-win. All the discussions, I mean, I'm having with different companies. I mean, it wasn't that long time ago, I had a chat with Tommy as well, Fortnox CEO. So some insights that I got from the chat, I shared with Daniel. And if Daniel is going to have a chat, for example, with Tommy as well, besides this setup that we had today, he is most likely going to share as well with me. So it's definitely a win-win for all of us, all three, the cooperation that we have in place today.
Do you have anything to add, Daniel?
No, I would mention the January visit to Finland that Ari talked about, which you know, we got to meet 2 companies. The plan was to meet both of them physically, but Omicron put a stop to at least one of them. So we visited one physically, and the other I went to Finland and then had a Zoom meeting with the CEO and the CFO of a Finnish company there. So I think in terms of you know, what I wrote about coming home more and more to the Nordics, I think Ari adds a lot to that with Finland, which I think, you know, are coming a lot with both new IPOs and just many interesting companies. I think Sweden has been ahead of the other 3 Nordics for some time, and I think Finland is coming.
Then I give the word to Hayato. Looking forward to your question.
Thanks, Delvin. Hey, Daniel, how are you? Yeah, hey, I guess you've already answered this in a way, but I wanted to ask again because it's, I guess, kind of related to COVID and the Ukrainian war, etc. And you kind of answered it quite eloquently. But and so this is a question that's quite broad by design, so I do apologize in advance. But what is something business specific or macro related that really freaked you out in the market in the last, let's say, 15 months? Of course, there's a lot of things happening in the world, but you know, maybe certain like events or outcomes that, you know, warranted you to kind of monitor more closely as it may impact your investment strategy and or investments.
Yeah, thanks for the question. Great question. I think you know, you don't get freaked out anymore. You kind of seen everything, it feels like, and what I haven't experienced in real life, I have actually read about, whether it's you know, the 2008 crisis or whether it's you know, the IT bubble back in 2000. So you're not really shocked by anything. I mean, when the war came along, which I think caught many people off guard, it almost felt like, okay, so that's one other thing to consider, but it wasn't a bigger thing than that, which is, I mean, on a personal level, yes, it was a much bigger thing, because obviously my wife is from Ukraine, so we're quite affected there. But in terms of, you know, investing in the markets, you really have to be prepared with all those things. To lift out maybe one thing, and I mentioned this in the letter as well. Last year, at the end of the year, I think we had a discussion at the board level, and then I have been thinking about this for some time, that some valuations were getting up there, more than they had in the past, say 5 or 10 years. Not in the sense that it freaked you out in any way, but in the sense that you at least had to seriously consider trimming or even selling some of your highest conviction ideas. This is, I can't remember that this has happened in the past 5 or 10 years to the same extent, and it was a little bit of a new situation, I'd say. It got up to such extreme levels for many companies. I don't think it got to extreme levels for our companies, but I think it got to high levels, and at least for some of our companies. And then comes the question, so what then? If you think you should do that, should you go to cash, have 50% in cash, or even more? I mean, we're set up in a way where we could actually have that without me being fired. But at the end of the day, when you look at that, investing is a game of relative opportunities, right? So to give you an example, something at 10 times earnings, that's very interesting if everything else is at 30 times earnings, all else equal. But if everything else was at 5 times earnings, that wouldn't be interesting, right? So it's always a relative game, and you always have to compare it to the alternatives. And I think as long as the investments are superior, whether even if the expected return is lower than it maybe was in the past 3, 4, 5 years, as long as it's better than cash, which it's almost always going to be, and interest rates and all other alternatives that you could have, the most surefire thing is a government bond. If the interest rate on that is 6% or 8%, with no risk, of course, to take on some risk by investing in public companies, it needs to exceed that. So and by a fair margin as well. So yeah, I think that was maybe one thing I'd lift out. And besides that, there's been a lot of things in the past. It's easy to forget Brexit now. It's easy to forget that Trump was elected. When we started River Oak, Trump was actually sworn in, I think, on January 21st, and River Oak was registered on February 7th. So 2 weeks later. The word was very uncertain then, maybe, even more than now, some would say. I guess 50% would say it was more uncertain then. 50% would say it's more uncertain now. But yeah, so I that's expected. I expect that to continue. And that's why the focus is always on, having a call with people like Tommy, thinking about the prospects of that rather than, having a call with Ursula von der Leyen or someone else in the political landscape, right? Yeah.
So with the look on time, should we do a final closing question and then, or do you want to continue, Daniel? We already, I think.
No, I think if that's if there is one more question, I think we can take it.
Daniel, the next Daniel is asking a question.
Yeah, Daniel Björkman there. Yeah, I was really curious about, it might be a long question, but your thinking around investing in kind of first and second round startups in the future.
Yeah, we have had I've had a few founders reach out about that, and I've had a few come through contacts. I just think it's the experience we have with it is that, say that a handful or a little bit less than 10, I think, over these 5 years that we have had a process of actually where I looked at it or when the board looked at it. And it was, most of them did not come to a late stage. I'd say at least one of them came to a later stage or two. And the lesson afterward, it didn't happen with any of them. The lesson afterward was, it takes so much time and effort to get to the same level of knowledge and same level of just understanding the situation that, you really have to question if it's worth it. Because if we can put in, say, a few percent of our capital in it, because they're usually on the smaller side of things, those that have reached out, doesn't really make sense to do it along the same lines that I don't think it maybe makes a lot of sense for us to invest, 5% of our capital in Brazil or China, because the path to get to some level of understanding is just so long compared to, the public companies that we invest in, that we have so far invested 100% in. So yeah, I think that's really why we haven't done a lot there. I don't think maybe it's reasonable to expect that we will do a lot there in the future. One prerequisite is that if it's going to happen, I probably need to have some sort of relationship with the founder or founding team prior. So you get a lot of that out of the way, where you know that you trust them, you trust their numbers, and their motivations and so on. Yeah, so I'm not fully against it, but it would have to be an exceptional situation for it to be able to make any sort of difference for River Oak as a whole.
Yeah. Okay. Thank you.
Hope that was some
Absolutely.
answer. All right. I think if that's last question, Tilman.
I have this one question from the internet that I like to, or from previous people who reached out, from people who've reached to me previously. It's a bit on the failed investments like Good Food and Stone Co. Have they reshaped your framework of investing? Is there now something different in the way you do the investing framework?
Yeah, and in the case of Stone Co, I think it was one of a few investments we've made abroad over the past few years, and it's easy to think that you understand a situation like that perfectly, and it's easy to, because all the information you get in the public reports, you feel like you have a lot of it, but at the end of the day, usually what makes a difference in an investment is what's not in the reports, right? It's what you see in your everyday life, what you see around you. That really is what helps you most, I think, in getting to a place where you have a good view on the next 2 or 3 or 4 years of earnings, which is really what matters at the end of the day in what we do. So I think a lot of things came up over the last 2 years really, where I felt that I realized that I didn't have as good an understanding of that as I thought. Of Brazil, I knew I didn't have a very good understanding, or a perfect understanding about China, but I was able to live with the risk of that. I was warned by a few friends, one particular in China I can think of, that said, be really careful there, because we do 2 or 3 calls every day, and we miss a lot of things. So as long as you stick to very broad themes, it may work, but he basically said, I'll still advise you not to do it. And I think it just took me a few years to get there, to realize that the time is better spent here. And in terms of the other one, Good Food, I think that the main takeaway there is, for me, is just, I knew they're very well going in. There were large challenges, tough business model. I was just fooled to some extent, I think, by the effects of COVID and what looked like, a brilliant execution path since foundation in 2015 or so. 5-6 years of brilliant executions, very good numbers. A COVID quarter had already passed, where there was a slowdown post-COVID, but the numbers still looked very good. I think I was a little bit fooled by that, and I think I was a little bit affected by patience, right? I mentioned in the letter that at the time there hadn't been a new investment since our early 2020 investment in QT Group. So about 1.5 years later, a lot of things had gotten expensive, and you start looking in places which are a little bit, or much less expensive. And then you have risks which you don't have in the type of software and online based companies that we usually look at and invest in. And I think it was a little bit of a going off path a little bit, to a place where the price was simply a lot cheaper. And so you just reinforce, I would say, older lessons that you had already, that you were well aware of, but it just, you need to reinforce them, unfortunately, every few years, it seems like. And, I'm obviously gonna make more mistakes in the future, but I think it's clear to me that when you make a compromise on the business model, that's a cause for really you put yourself in a risk position which you don't need to do, and which we haven't really done a lot of historically. So I think we'll definitely stay away from most of those where you have a lot of other risks, right? A lot of logistics risks, you have execution risk, you have unit economics with very, very thin margins. So when you have a bad quarter in one of our software companies, they might grow slower, margins might lose a few points, but they're not going to go to losses all of a sudden. This is what happened when you have a very tough unit economics. They have a bad quarter or a bad year, you have to start thinking about, do they have cash to survive this? So, yeah.
Then thank you very much for the great insights, and thank you very much for coming to this meeting. Besides, it's a Saturday. Danny, do you want to put out some closing words?
Yeah, just echo Tillman. Thanks to Tommy, who is not here anymore. Thanks to all of you who came. I hope you didn't lose too much of the beautiful sun, at least in Sweden, that we have for the first time in a few months, it feels like. So thanks so much for coming, and bye-bye.
Thank you.
Thank you very much. Bye-bye.
Thank you.
Bye.
Bye.
Thank you.
Thank you.
Bye.
Bye-bye.